Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come. What's up, everybody? Hump Day Edition, daily market commentary. Glad you're able to join us. I'm Chuck Fulkerson. Hope you guys all had a great trading day yesterday. We are down this morning in the S&P, and the NASDAQ is also down, and we're seeing a little bit of a rise in gold, so that correlation is continuing. If you are new to the channel, do me a favor, click the subscribe button, hit the notification bell, so you get the alerts and the updates as they happen. One real quick announcement before we dive into it. If you have not already heard, starting Sunday night, join us Sunday night for our live trade rooms. We're going to open up a free preview week at TradersArmy.com. I know we have a lot of people out there that have been asking about what it is that we do. This is your chance to get a peek behind the curtain, ask whatever questions you want, come in for the full week, and see what it is we do, get access to our live trade rooms. If you got any questions, go to TradersArmy.com, sign up for a free membership, and you'll get the info on how to join us. All right. So the S&P this morning, we are down 9 points, and this was brutal. So yesterday I talked about how to play this breakout. Now, the conversation yesterday around this breakout was, if we don't get basing in front of this level, then we can probably expect a little bit of a reversal up here. Now, I did have the pretty firm belief that we would trade into the level, and then we would take a confirmation short coming out of the level. Unfortunately for me, we didn't trade deep enough into the level, so there was no trigger on the entry. Now, I can't get upset about that because I followed my rules. What that allowed me to do was to stay out of a bad breakout, and this is exactly a bad breakout. And this is what a lot of people will call a false breakout. And they'll tell you, well, that breakout didn't work. No, that breakout worked perfectly because you weren't supposed to take it based on the rules. I still have the circle here. So if you didn't catch yesterday's DMC, go back and watch our discussion around that level. And that's exactly why we stay out of it. Now, why was this a confirmation entry up here? Well, this was a confirmation entry because we're in a big picture upward trend. And I don't want to try to trade against the big picture and short this close to the all-time high on a limit entry. I'd rather do it on the confirmation entry. And the reason for that is because I would rather stay out of a bad trade than get into a good one. Meaning I don't want to, make too many mistakes that are going to add up over time because, people talk about, well, just keep your losers small. Well, if you've got too many small losers and not enough winners, then that winds up hurting your account as well. But what I am going to look at now is this area here, which was the origin of this speed candle. And we do anticipate speed candles to get retraced. So this is the area that I need to look now for a potential reversal as price comes back down into this zone. So we'll keep an eye on this area for today. Same thing in the NASDAQ. Now, the NASDAQ didn't come near our reversal level, but I do have that same area for a potential reversal right here, based on the fact that it's a speed candle, and I expect those speed candles to get retraced. In crude oil, so in crude, we are still, kind of chopping around, not as strong one way or the other. We had that little breakdown area, which has shown to be pretty effective. We're kind of chopping above this area of demand, so I could see a reversal coming off of here. So really looking at this, I want to go to the 4-hour chart. And I'm going to go to the 4-hour chart primarily to see what my trend is. And my trend right now is sideways. So with this sideways trend, and I say it's sideways, it's technically a little bit of a downtrend with a lower swing low and a lower swing high, but it's a very weak one. I'm still more apt for shorts, no question. And so we could see a breakdown from here. Now, my fear is that if we get a breakdown from here, I've got this little area of demand here still to contend with. So I'm not going to put in another trade on this. I don't have a clean breakout, but we could see a breakdown from this region. If you wanted to be, we talked on Sunday night about trading a crude oil futures contract and just buying the option on future and just buying the put. So, buying the put may have been a way to go. That way you didn't have to be quite as exact on your entries and targets. So keep that in mind as well. Gold, looking at gold, here was our level for gold, was this area right up in here. Now, you may or may not have gotten filled depending on your entry type. Once again, this is another one where the confirmation entry just didn't get me into the position, and that's exactly what happened here because it was a confirmation entry. Once again, I'd rather still follow the rules than force a trade. And so this confirmation entry, it was a perfectly executed wick over wick level with a strong move away. But because we came close to it, I switched it to a confirmation entry. So I didn't get to partake in this move down. Let me know in the comments below if you did, because I know a lot of people probably did, and maybe you still took it as a limit entry, and that was a pretty good little move. But I'll be the first to tell you when I don't execute something, and I did not, because it didn't come far enough and deep enough into the level after coming close to it once before. So I've got to follow the rules, which is sometimes disappointing, but really it's disappointing after the fact. Confirmation trades typically keep me out of bad trades. They don't necessarily always. It's not designed to get me into good ones. It's designed to keep me out of bad ones, and so I'm okay with that when I miss out. Now, looking at what we have here, we've got a lot of these 3 wicks in a row that are upper wicks, showing me that there's some selling pressure in these candlesticks. I would expect that there's going to be a rollover in price continue to come down from here. So at this point, I don't have any setup from a technical perspective that makes sense, and so I'm going to hold off at the moment in setting up a trade. Just like I did in crude oil, but I think we could still see a move down from here. Now, what could cause a move down from here? The best thing that would cause a move down is if the Nasdaq and the S&P drop down to these demand levels and reverse. That would be what would cause gold to move down. All right, looking at our bonds and currency markets. In bonds, we rallied off of our level yet again. This is the second time that we've rallied off of this level down here. We did not have a setup here for a long entry because we've already hit there twice, and some of you may have because it's a fine area, and we've rallied off there a second time. It still stands for a quality breakdown if price comes down from that region, and our short is still existing up here. I don't want to lean on this because this is not an authentic level. It's a retest of this here to the left. So right now I'm not going to add anything to this one, although I could see this rolling over as well. In the Aussie, we are closer to our demand level, which is the origin of this move up, making sure that we have at least a 2-to-1 reward to risk for this trade to make logical sense. And then there's this little area up here for potential supply, and we're kind of in between both. So I'm okay with either level. If you want to give the short a go, this long is down here though after the speed candle, where we typically see a bit of a reversal. Remember, if we get basing in front of the level, it's going to cause it to die because it'll be the kiss of death. The euro level. That euro level price came super duper close to that euro level and just nicked it. Just away from it by a tick, and so this was unfortunately not an entry. It's one of those days where there's so many things coming super close, and just the entries just didn't necessarily fall through, and that's okay. Once again, your job is not to go out and find all the trades; it's to stay out of the bad ones. And this one missed by just a tick, so now I've got to switch this to a confirmation long based on the rules. And so there's nothing really else to add as it's still kind of in between those two levels. Next would be the Canadian dollar. So the Canadian dollar actually did work out extremely well as we came into the level, and we've gotten a pretty nice move away from that. So if you did take the Canadian dollar, take your stop, move it to break even. There's opportunities for price, I think, to continue to go down into the origin of this speed candle, but nothing else to add at this point. Last but not least, Great British Pound and Japanese Yen. So our Japanese Yen level and Pound level both. Taking a look at these. So the pound, we came up into this little tiny, 15-minute area, chopped around, and it's sold off from there, but there's a lot of wicks happening here. And anytime I see that many wicks, it scares me as far as what may go from this point. So we do have a confirmation short up here. Unfortunately, we're now going against a pretty strong upward trend, so be aware of that. If you're looking at these confirmation shorts, you're going against some fairly strong upward trending in the 4-hour chart with buying power coming in on these wicks. So I would actually at this point probably remove this level and now convert this one to a confirmation entry. Remember, the reason we go to confirmation entries is because of our, we've got a scoring sheet called the top performing trades, both breakouts and reversals. We call them top trades, trade optimization plan. And the way that we calculate our trade optimization plan, it's going to tell us whether we use a confirmation entry or a limit entry. And when I look back at the origin of this level, I've got to come all the way back to here, and this is a pretty good level on the origin, right? My angle of move away is pretty good. The arrival here is really what scares me. But even if my arrival is good, those two score perfectly. I'm still trading against an upward trend, trying to short against an upward trend. So that's going to, by its own very definition, it's going to lower my probability score. And my trade optimization plan says that I would go from a limit entry to a confirmation entry. So everything we do is rules based, and I want to follow that rule. And if it's going to tell me to switch to a confirmation entry, I'm okay with that. Now, sometimes that means that it's going to keep me out of trades, like the S&P trade I talked about. And I'm totally all right with that. I want to follow the rules and do what the rules say. So if you guys have any questions, please send us an email, support@tradersarmy.com. Remember, tomorrow, no daily market commentary since we have our live trade room. So if you're a member of Traders Army, I will see you in the live trade room tomorrow morning. If you guys have any questions, let us know.